Visualizing a scenario where each morning you awaken to a reality in which the US dollar has ceased to hold its position as the default currency in international commerce. This transformation in the landscape of global finance is not merely an abstract concept but a potential future unfolding at a pace quicker than you might anticipate. The dynamics of trade and finance are evolving, and the implications of this shift could have far-reaching consequences for economies worldwide. A new era in oil trade. In a significant maneuver on the global stage, Russia has effectively positioned itself as a key player in the oil trade by establishing a partnership with one of the world's foremost economic powers, China. This strategic decision allows Russia to sell oil to large quantities and circumvent reliance on the US dollar, which has long dominated international transactions. According to statements made by the Russian Prime Minister, an impressive 90% of the oil trade between Russia and China is now conducted using either the Chinese yuan or the Russian ruble. This pivotal shift in currency usage has resulted in Russia surpassing Saudi Arabia to become China's largest oil supplier, a development that not only enhances Russia's economic standing but also cleverly navigates the numerous sanctions imposed by the United States and the European Union. At the same time, Russia has witnessed an incredible surge in oil exports to India, with figures skyrocketing at an astounding 22 times their previous levels. Collectively, the combined purchasing power of China and India represents an extraordinary 90% of the Russian total oil exports, even as the nation navigates through significant Western sanctions to undermine its economic strength. This remarkable shift in oil trade indicates a larger pivotal transformation in the global trade dynamics, particularly among the BRICS nations: Brazil, Russia, India, China, South Africa. Yes, these countries actively pursue strategic measures to reduce the reliance on the US dollar, signaling a decisive realignment towards a multi-power economic landscape. Traditional trading practices are not just being challenged in this evolving environment, they are also undergoing a comprehensive redefinition, illustrating the dynamic changes in international economic relations. As these nations forge a new pathway for collaboration and trade, alternative financial systems (CIPS) and SPFS. China took a significant step forward in 2015 by introducing the new cross-border interbank payment. This system, commonly known as CIPS, to reduce dependence on the dollar-dominated financial networks. The innovative platform enhances the ability to conduct international transactions using the yen, thereby increasing the currency's global presence as well as utility. On a similar front, Russia recognizes the need for a robust alternative to the existing financial framework, and in 2014 unveiled its own system for transferring financial messages, SPFS, which is similar to the SWIFT. This system is designed to withstand economic sanctions, ensuring that Russia can maintain seamless financial communication independently. Together, these emerging financial infrastructures not only provide vital alternatives for the transactions, but also empower nations within the BRICS coalition to navigate traditions, the dollar-centric payment channel. The shift underscores a growing trend among these countries to bolster their economics and create a more diverse financial ecosystem. Then there is the gold strategy. In the unfolding narrative of the economic shift, gold is a pivotal player in the broader context of de-dollarization. Nations within the BRICS alliance have been pursuing aggressive accumulation of gold reserves, constantly pushing gold prices to unprecedented heights. China's gold reserve strategy has seen nations accumulate an impressive 314 tons of gold by March 2024, increasing its official gold holding is an astounding 2,262 tons. China temporarily halted its gold purchase as prices surged to record highs. However, this decision does not obscure the overreaching strategy of deliberate efforts to diminish reliance on the US dollar by bolstering investment in alternative assets like gold. Meanwhile, Russia has demonstrated a similar favor in the gold acquisition practices. During September 2024 alone, daily prices of gold skyrocketing from an initial 1.12 billion rubles astonishing 8.2 billion rubles. This leap in gold procurement is significantly supported by the country's robust revenues generated from the oil and gas exports. As a result of these concerted efforts, gold now constitutes a substantial 31.5% of the Russian total reserve, underscoring the critical importance of this precious metal in diversifying national wealth and reducing vulnerability to fluctuations in the global dollar-focused economy. The BRICS Summit and beyond. In October 2024, the prestigious BRICS Summit occurred in Russia, marking a significant moment in the global diplomacy and economic collaboration. This summit welcomed four new member countries: Egypt, Ethiopia, Iran, and the United Arab Emirates. Their inclusion signifies a notable expansion of the BRICS group, significantly enhancing its global influence and outreach. Among the key initiatives unveiled during the summit was BRICS Pay, an innovative proposal to provide an alternative to the widely utilized SWIFT system. This proposed mechanism facilitates seamless transactions among member countries utilizing their respective national currencies, thus promoting greater economic independence and cooperation with the group. One of the most intriguing aspects of BRICS Pay is its potential integration of the blockchain technology, which could revolutionize how financial transactions are conducted across the border. This initiative reflects a broader goal for the BRICS nations to create a robust framework that would help insulate members' countries from impact of US sanctions. By establishing an independent financial ecosystem, BRICS aims to reinforce its own economic sovereignty and challenge the transform of prevailing monetary order that the Western powers have no long influence. This strategic move indicates the group's ambition to reshape the global economic landscape and position itself as a formidable player in the international stage. We stand on the cusp of a historic shift as the BRICS nations strengthen gold reserves, build alternative payment systems, and challenge the dominance of the US dollar. They're rewriting the playbook of international trade and finance. Stay informed and closely monitor these emerging financial infrastructure. Whether you're an investor, policymaker, or curious observer, understanding these shifts could help you navigate and potentially benefit from the challenging tides of global economics. Please leave your comments below to keep the conversation going.